name doesn't matter.
Okay, thank you.
I can just say that we have spoken to a company that is doing software where if a tenant complains, in case the water leak or whatever, when the moment they send the SMS, that SMS goes through to the building manager, to the caretaker, to the office, and to the you can have maintenance people like a plumber, electrician, that is being appointed. And that SMS will go through to the relevant person who can then immediately react. And before you in the office can actually call somebody, they can already make an appointment with the tenant for viewing and repairing. So there is definitely fast ways to kill the cat there.
Yeah, all right.
Okay, I'm just going to say what is the importance of property managers. Property management is an important discipline in the investment property market. When investors, speculators, and developers purchase a property, they are not buying the bricks and mortar that make up the property. They are not buying the land on which it's situated. They are in fact buying an income stream or a potential income stream. They believe that the investment of their funds in particular property will yield a specific return on their investment. Each investor has a different requirement depending on their own individual risk profile. Naturally, the higher the risk, the higher the expected return, and the lower the risk, the lower the expected return. You will also have seen that small differences in the net income of a property translate into big differences in the value of the property when applying the cap rate. Now, this is very important for you as developers and also for landlords, where you're going to manage their properties, is that your return on investment, you purchase that property and you are liable for a repayment to the financiers of a certain percentage. If you don't meet that, you're going to get into big trouble. So it's very important to make sure and to have your layout of your company properly planned so that you will make sure that you can meet the landlord's needs. I'm just going to give this example: 10 million net income and a cap rate of 10% gives you produce a value of 100. Is that millions? Yes. Plus, yeah, it's a million. We now have a net income of 11 million. Applying the same cap rate, we now have a value of 110 million, which translates to 10% or 10 million improvement in the value of the property. Okay, the learner's note, I'm not going to read it now, that you can read. Who are property managers? Property owners may employ their own in-house qualified staff to manage their property portfolio. Now, this is going to be a bit outdated. In the new property practitioner bill, it states clearly that if a property owner owns more than 3 properties, a registered qualified agent or agency must manage their property. And it is really very important, as we did hear from the CEO on Saturday, they have to, everybody that will be registered with the board. And we did have a meeting some time ago also with one of the board members, and they are very adamant that they're going to fine people. So that is their way. Where are they going to get money from to hand out or to pay for their own staff? So there must be a sort of an income stream, and their main income stream is the fines, unfortunately. Professional property managers, property owners generally outsource the property management function to a professional property manager. The advantage to outsourcing the property management function can be debated backwards and forwards, but certainly the trend over the last few years has been to outsource the function. The overriding motivation for outsourcing is that, as in most areas these days, businesses are sticky to their core function and concentrating on being specialists in their field. This creates a higher level of competition as companies compete against one another for new and existing business. And at the end of the day, the consumer of the service, the property owner, benefits from the higher level of competition amongst property managers in the marketplace. Professional property managers. It is important to know that legalities under which the professional property manager operates and the various requirements to qualify as a property manager. Clearly, these requirements do not apply to property owners who do their own in-house property management, as there is essentially no client to be protected. Now, unfortunately, this is also not correct. I don't know why did they put it in, because the new Consumer Protection Act states clearly that any rental agreement signed for longer than 1 month is definitely under the Consumer Protection Act, and no property owner is exempted from that. Estate Agent Act, the property management function is governed, instituted by the Estate Agents Act, and the Estate Agents Board is the controlling body with which the property manager must register. The property manager is in fact an estate agent and must open an estate agent's trust account into which all property income is deposited and from which all property expenses are disbursed. The bank account name must clearly be styled as such, trust account, in terms of section 112 of the Estate Agents Act. And I can assure you that when the board comes for inspection, they will take that trust account, and you are not allowed to pay monies in and out from that trust account or swipe that card for anything else. If it shows that flat C, whatever the name is, Cabello, paid in 5,000 Rand deposit, it must state clearly that is the Cabello's deposit for that unit. If that doesn't show clearly, unfortunately, they can actually give you a fine there and then. And if they're not happy, they can even close your company. Interest on trust funds. This is, yes.
Sorry, if a tenant senses foul play as far as the deposit is concerned, who do they complain to? Because you said that it's not allowed to be used, it's supposed to go in the trust account and you can't swipe for that. Who do you complain to as a tenant?
You complain to the Estate Agents Affairs Board, and then that company will immediately get an inspection.
Okay.
There is in fact on the Estate Agents Affairs Board, Alex, where we were last night, on that board, yes, on the right hand, where you pull the complaint form, you put the yes, complaint in there, because if you put in the complaint, remember they ask you for the subject, then you put the subject in here. Okay. And you upload your proof and complaints there.
Okay.
Now, interest on trust funds, I always advise that a tenant does not get the interest on the deposit, for the simple reason the interest rate at the bank fluctuates daily. So for you to get 100% correct figure, you must either open a sub account under your trust account into the name of the tenant and put that deposit in there, or you are going to battle to do a proper calculation. If you do it that way, that tenant will also be liable for the banking cost. And I can assure you, the banking cost is going to be more than the interest that he gets per month. So it's, you know, I paid out several times interest. It works out average about 2.5% per month. And sorry, there's an echo. It's approximately 2.5% a month that you can actually calculate it on. If you work out, I paid out once an interest, a deposit 5,000 Rand for 24 months, and it worked out 48 Rand something. So I didn't think it's worth the calculations. So I advise you say that the interest will be paid to the Estate Agents Affairs Board. It don't open any worms for you, or maybe that tenant is working for the bank and can, if they put on their system a calculation, it works it out exactly this an amount. So they cannot complain or say that you paid them not enough interest. And it's costing you bank cost every month. So if you say you pay the tenant the interest, you cannot claim the bank cost, then you must carry the bank cost. If you say the interest goes to the Estate Agents Affairs Board, you can deduct the bank cost first, and the balance of the interest, you divide it into two. 50% to the Estate Agents Board and 50% to you. And according to the CEO, that figure didn't change or will not change in the new property practitioner bill. Okay. Fidelity Fund. This is the Fidelity Fund. The attorneys has got their Fidelity Fund. So we've also got a Fidelity Fund, the estate agents. If it happens that maybe monies get lost or some illegality goes on, then at least that Fidelity Fund can cover up the tenant with their deposit. So that is where that 50% of that interest is going to. It's going straight into the Fidelity Fund. Management agreements. It's very important to have a signed agreement between, this is like a mandate, between the property owner and to the company. So you've got the property description, the commencement date, duration, specific, what do they want from you, and the reporting requirements, trust account, description of services provided. Do you have to pay the municipality account? Who's going to work out their SARS? Who's going to work out their VAT, if that is applicable? Yeah, everything. So it must state clearly what do they expect from you. Activity management. We will go back to this management agreements on later on. You can read it through and try to do it. Otherwise, we can just talk about it. Property management fees. There is different fees. You can set your fee in departments. So you've got your management fee, or what they call the collection of the commission fees. You've got your letting commission, and you've got your consultation fees. So you can break up your fee for in case where I'm registered, we've got a 10% leasing fee and collecting fee, and then we've got a 2.5% managing fee. So that is the after sale service, after rental service, if one can call it that way. The letting commission, that is also according to SAPUA. SAPUA is the commercial regulator for commercial properties. And yes, you can register there. There is specific, they have a regulated commission fee. I will give that fee through to you. Other income, consultation fees. We as agents, I don't know why they say this. I think this is more for the body corporates or the homeowners association, but we as estate agents do not charge consultation fees. I think that is more for the body corporates. Property management, we can do residential property, commercial body corporate property, corporates, residential body corporates, or the homeowners associations. But if you want to do, yes.
Sorry, the body corporate, are they also under the banner of EAAB?
Body corporates, and normally they have to be registered agents as well. But you do get attorneys, but attorneys can also register as estate agents. So they are normally estate agents. Pretor, for in case, I'm thinking now for another one out of the box. Pretor is one. FPT, I think is also a body corporate. And Hiercor is also doing body corporates, yeah. But I must say that we do in not one of our training material, and I don't want to say NQF4, but also NQF5, is not talking much about the body corporates. So if you want to do body corporates, it's advisable just to do like a short course. It's a one-day course that covers that up. But in principle, everything still stays the same. It is just now the legal things that comes in. I can touch on the legal things on when we do our the portfolio. I can just quickly do one of that in on the legal things. What is it will be short notes. Is that acceptable?
But isn't it that to be a member of the board of corporate, you have to own property in that cluster or building? Are you telling me that I can be part of the body corporate if I do this course for body corporate?
No, you can only manage it then. You only act as an estate agent. You don't get onto the body corporate unless somebody appoints you to do so. Like if you are an accountant or you act as the attorney or you've got a specific role and you do not own a property there, then they can appoint you. But other than that, you have to be, I think there's like a percentage that must be on the body corporate.
Okay, can you approach a body corporate as an agent and tell them that you want to act as an agent for them?
You can. You can.
Okay.
But they don't. But I must say they are not very easily to do so, because the problem is that they are not worried about the rents or the people. They only worried about the levies. That's their role, is the levies. And, is the security looked after, and is the gardens clean, and et cetera, et cetera.
Okay. All right.
Okay, so for the purpose of this model, we will therefore assume that the property we are managing is a multi-storied, multi-tenant, commercial or retail property owned by a single owner. So anything we do will be taking that in consideration. The leasing function, for the sake of completeness, a lease agreement may be defined as an agreement signed between a lessor, the owner of the property, and a lessee, the tenant, whereby a specific premise is leased to the lessee for a specific period at a specific price. Leasing strategy and current market conditions. First and foremost, the property manager must begin by agreeing a leasing strategy with the property owner. The property manager needs to know what his specific mandate is with regards to the property and what his authority levels are. So that's very important. Current lease profiles. The property manager needs a profile of the current lease expires in the building in order to better manage any potential crisis periods that could present themselves in terms of large percentages of the area of the property potentially becoming vacant within a short space of time. So this is very important. When you take over a building, it's actually you're taking over a headache. But yes, we do it because we want to do it and we have to do it. But you have to the tenants must recomplete your application form. You have to do a new ITC check on them. Now that is where the crunch of the story comes in, because say for instance, that tenant, when at the time that they were placed into the building, the ITC and everything was good at the previous property manager. Now they get to you and the ITC is not good anymore. You cannot evict them immediately. How to do in that circumstances, we just sign up a month-to-month rental agreement with the idea that if they default, you can at least give them a notice. But then you must also put that in writing to the owner to say that tenant 1, 2, 3, and 4, this is the outcome of the ITC, and they must know that you can expect a problem. But normally when you turn the lease around, instead of a long-term lease, sign a short-term lease, month to month. It's out of the Consumer Protection Act. And then on the 7th, if they haven't paid, you give them notice, they must just move out at the end of the month. In fact, my contract said they must move out immediately, but by law, you cannot enforce them to move out, but you can force them to move out at the end of the month.
So, Rina, in the event that when you take over a property, people signed a long-term lease, like you are saying, but their report come back and say their credit rating is no longer good or something like that. What happens in that event? Let's say they signed a 36 months contract. You only came in at month 12. There's still 24 months to go.
If it happens that, unfortunately, if you sign, if the lease is with you and the default is with you, then you have a bit of a problem. Because you can try, and you can even go to the tribunal as an owner. I will definitely challenge it maybe one day, is to take a tenant to the tribunal and say, listen, this was, and this is the proof when they moved in. Now they lost their job, for what reason, and they cannot pay anymore. So I want to change the terms in the contract instead of a long-term lease on a month-to-month. But you cannot ask them to move out, unfortunately, unless they haven't paid. Then you can cancel the lease, and there is a procedure to cancel a lease. You can't just tell them it's you can say it's cancelled, but there is a period that must follow. You must give them time to rectify.
All right, thank you.
Marketing and of vacant space. Most importantly, the lease manager needs to market the existing vacant space in the property. This is done in a number of ways. To let notices, vacancies listed on websites, sending vacancy schedules to active property brokers, advertising in newspapers, in targeting of specific type of tenant, targeting specific tenant like Pick n Pay, Quick Spa. So there's ways, but normally most of the property managers or estate agents do have a department of the estate agents where the agents, it's like an open mandate to the agents. Whoever puts the tenant in first, that one is the letting agent. Final vetting of a tenant. Oh, and this is so important. If you have to vet this tenant. Once a property manager has sourced what he believes to be a suitable tenant for a specific premise, he needs to ensure that the prospective tenant has a solid track record, or if it is a new business, that they have a viable business plan. They have to complete a full application with at least 3 months bank statements, with 3 payslips, and with a copy of their ID. And if you are not very comfortable, you can even ask them for the latest, it's advisable actually to do that, the latest statement where they rent currently, their latest rental statement. Then you can see, is this tenant in arrears, where they're coming from, are they running away, what is the status there? And if they give you a company's name, if it's not a known name, please Google that name, make sure that name exists and that the address is where they say it is. If they give you a cell phone number for the employer, then you Google that employer, get the landline and insist you want to call through the landline, because it is easy to give a buddy's cell number and they can pretend on being the employer. Bank guarantees are normally not transferable. This means that when a property is sold, the bank guarantees are no longer worth the paper they are written on. That is very important. We will cover the bank guarantees on the activities. Lease agreements. The parties to this agreement must clearly identified by name and registration or identification number, the exact description of the premise to be leased. a building name, floor name, and so you must be able to recognize that property on paper. Commencement date is very important because that is the effective date as well. Installation allowance, if any other installation, this is more for commercial properties where the landlord will say, okay, I will pay 50% on any installation that you do, electricity, whatever. Rental payable, normally it is a deposit plus 1 month's rent. If it is commercial, it can be 3 months deposit and 1 month's rent. Any escalations in the rental and the cost on which the date they escalate and how escalations will be determined. The deposit or alternative form of security that's required. The purpose of which the premises may be used for. How and any breaches of obligations are to be handled. Remedies, termination date, responsibility, options to renew. I think you remember this when we did the rental contract. That was everything in that rental contract. Activities relating to facility management. This is your facility manager that will manage this one. Is the municipality service, insurance, fixed contracts. So this is your soft service like Wi-Fi, that type of services. Staffing, plant maintenance item, ad hoc maintenance items, tenant installation cost, once-off capital item expenditure on plant or equipment, compliance with health and safety regulations. Your fire, all those type of things. That is your under your facility manager. Any questions up to here?
Yes, Rina. Sorry to take you far back. My mind is still stuck on that 10 million, 100 million thing. So, in essence, you are saying that a property owner must sign or can sign an SLA with key performance indicator that says that they must manage the property well so that the property can gain 10% more value per year. What was that? What was that? What were you trying to communicate with that? I'm still stuck there.
Okay, can I go? Can we finish this? Then we'll go back to that slide.
Sure, that's fine.
Okay. So up to here, any questions? Okay, the initial audit, you will definitely have, and what's nice is the financial systems that you get for property management is actually an automatic audit system as well. At the outset of the property manager needs to obtain a clear picture of the property and its workings. A full inspection of the property should be performed to ensure the property is operating at its optimal capacity and to identify any potential cost savings areas or where the property owner may be at risk due to existing conditions of practices. I can just mention one thing, Pretoria CBD. There's areas in Pretoria CBD. Do you know that actually Pretoria is built on water? There's a fountain under the buildings. So they have to have like a reservoir, a water reservoir under the buildings. And you have to pump that water out at a regular basis. So what happens now is that with all the water crisis in the old days, they just pump it in on the road and in the stormwater system. Now they pump it into tanks which they can use as fire water and things like that. So you can, like, instead of the owner then paying 20 all the requirements for water for the bulk services, you can actually put up tanks and use that water, pump it in there, and you can use that for fire if needed. Municipal services, this is a crucial thing. You have to, this maintenance guy must also make sure that when the municipality services goes up, it's, you know, at least in going up average the way that it must be. Somebody asked me the other day to pull an account, a municipality account for a building in Sunnyside, because I'm registered on E20, and I don't know how it works. but I'm not going to get involved. I just asked me for the documents. There's an outstanding amount of 2,200,000 and something rand. Where the municipality gets that, I don't know. But you have to look at that documents, because remember one thing, one day that municipality will decide they had enough. Even if it's their fault or mistake, doesn't matter. They will just put off your water and electricity. And you have to pay 40% for that to get to make an arrangement for them to put it on again. So it's important to keep an eye on those accounts. The municipality rating system, you have to complete this activity on your own. And in a sectional title scheme, it is also important to be aware of the fact that even a mixed-use development, provided the body corporate signs an affidavit and lodges the affidavit with the council, each residential unit is entitled to 6 free kilolitres of water. These are important considerations, especially in mixed-use schemes, which quite often the residential owners may in fact be subsidizing the commercial and retail sections owners if no provision is made in the management rules for these differences. This is normally due to the comparatively higher cost attributable to maintaining the common areas of the property, because the high level of general public visiting the property, which wouldn't exist in a purely residential scheme. Now, this is information that the property manager must know, and they must make sure that the property owner is you know, the municipality accredit this owner for this money. Insurance, depending on what the property manager agreement provides, the property manager may be required to ensure the property is correctly insured. The property manager needs to have a trustworthy broker able to negotiable competitive rates with the insurance companies. If a building is not insured, it is also a high risk. What if there's some fire or anything that happens in that building? The first document the police even will ask, everybody will ask, is the insurance. If this is not correct, then you have big trouble. So it's very important to make sure that that building's insurance is up to date. Fixed costs of services, that is your security and your cleaning, your gardens, as well nowadays the Wi-Fi. Now we'll write down 3 other software services that you could also provide to your clients. We say Wi-Fi, it is the camera system, security. I don't know if there's anything else that you can think of. Can anybody add anything? Okay, on-site staff. The management of on-site in the building staff generally falls under the facilities management function, and this may range from one on-site supervisor or handyman to a situation where a property warrants the full-time employment of a building manager and term of staff. The staff is either employed directly by the property owner or indirectly by the property manager on behalf of the property owner. Planned maintenance. The property manager needs to ensure that a planned maintenance program is implemented and adhered to ensure the smooth running of the property, especially when it comes to the student accommodation. Remember that during the year you will not be able to do proper maintenance. So November, December is advisable when they are out to do your property maintenance. Tenant installation cost. Once a lease concluded that the tenant may be work that is required to be carried out on the premises prior to the tenant taking occupation of the premises, the tenant installation process needs to be carefully managed and to ensure that the agreed upon allowance is paid by the property owner, but that any overruns on these costs are borne by the tenant. Both the leasing and facilities function need to work together closely at the time of the conclusion of the deal to ensure that what leasing is offering the tenant can be achieved within the agreed upon time and the agreed budget. Facilities administration. The administration function is critical in in ensuring that a property is smoothly and efficiently managed, it is imperative that the property manager has a fully integrated property management software system in place. A good property management system can make the life of the property manager a lot easier. Loading of property and property details. The input of data into the property management system is critical, and special care needs to be taken when loading the initial information relating to a particular property owner as well as the specific details of the property. That is normally your financial system where you load it off. Loading of leases, you also scan your leases in, you load it onto that system. So if anything happens via fire or whatever, it is also on a soft copy. Billing of tenants from the leases loaded onto the property management software. The monthly rental statements are generated. The fixed charges, such as rent and operating costs loaded as per the lease agreement, are automatically drawn through to the rent statements. But it is important at this stage to be aware of any other variable charges that need to be billed to the tenant's account. Charges to be billed, the list of charges that would normally be billed to a tenant is your water and electricity and any maintenance, maybe plumbing that maybe they blocked the drain and you had to get a plumber out and the count is for them, then you can also put it on there. Collection of rental, you might think that billing of rent and the collection thereof are one of the same thing. Unfortunately, they are not, as already mentioned. Tenants are prone to use their landlords as bankers, and it is easiest line of credit available to them. Property managers need to be alert to tenants who are merely experiencing a temporary cash flow problem and those for whom the writing is on the wall. This is one of the hardest parts of the job, but the property manager can play a critical facilitator role between the landlord and the tenant in these circumstances. If a property owner is willing to and able to sit it out and assist the tenant by not taking immediate action and eviction him from the premises during times of cash flow problems, he may save himself the cost of losing a tenant, having vacant premises for some time, and then having to pay the associated cost of sourcing and installing a new tenant. The property manager must also be aware of instances where it might be better to have the premises stand vacant than incur operational costs where a tenant is not even able to pay his basic consumption charges. Payment of suppliers from the funds collected from tenants and held in the property manager's trust account. The property manager must pay all providers of services to the property, both fixed and variable. These may also include statutory payments such as VAT, pay as you earn, UIF, SDL, workmen's compensation, etc., depending on the terms of the property management contract and whether there are any on-site staff, and if so, by whom they are employed. Preparation of budgets. Now, with our current systems, it is so nice because you can easily draw what is the real figures that you are working with, and to pull up your budget or prepare your budget. Forms an integration part of all the disciplinaries of property management, leasing, facilities and administration, but it is dealt with here because the reporting against budget must also flow from here. The preparation of the annual budget should start about 3 months before the end of the current financial year of the property owner. The income side of the budget is drawn mainly from existing lease agreements, but assumptions need to be made at the expiry of leases whether or not tenants will renew their lease or vacate. If they do renew, they will renew at an escalated rental based on their current rent, or are they paying a rent well above or below the current market rental for similar space. If this is the case, the property manager must take account of any possible adjustment to rental or any such revisions at the expiry of the lease. Expenses. On the expense side of the budget, consideration of existing market conditions also needs to be taken account of. Municipal charges are quite often one of the largest expense items in the budget, and if possible, some forecast from the municipality needs to be sought to get an indication of what the increases are likely to be. Reporting to the owner, here again, the property manager needs to understand the requirements of the property owner. Some property owners want detail and lots of it. Some only wants to know the basics and agree a few key performance areas, that what they want to report on. And remember, your property owner has to report to the Financial Institute monthly on their building. Implications across the categories of property management. Having outlined the broad principles of the property management function, it is important to be aware of the implications of the differences across the different categories of property management. So this is very, very important. Leasing function. In a body corporate situation, this function has no role where the property manager is appointed to manage the body corporate, as the body corporate does not generally own any property but merely manage the common property of the body corporate on behalf of all the members of the body corporate. Alex, do you get this answer now clearly? It is the common property, so your security can fall under there. Yes, your maintenance people will let you cut the grass, but you will manage or pay that landscaper to come and cut the grass. That comes from the body corporate.
Yeah, I'm actually highlighting it now. It makes everything clear.
Yeah. Administration function. The administration function differs in that instead of collecting rentals from tenants, the property manager is collecting levies from owners or members of the body corporate. Budgets are prepared on a non-profit basis, and levies are calculated on the basis that the running cost of the building need to be covered. In addition, if possible, a reserve for future capital expenditure built up. The apportionment of these costs is done according to the participation quota of each section, which is generally the area of the section expressed as a percentage of the total area of all the sections combined to 4 decimal places. Module 1, the facilities function needs to ensure that the management and conduct rules of the body corporate are complied with, and that the relationship between members of the body corporate is managed and controlled. The common property of the body corporate must be maintained and serviced, and the facilities function manages this process as it would in a single owner property. There is, however, never any vacant space that needs to be maintained, as every section is owned by somebody, and it is the owner's responsibility to look after everything within their section. But remember, the body corporate can also call out a special levy. Say, for instance, they have to upgrade the fence, security, things like that. They can call off a special levy. Checklist of services expected from a facilities manager. Weekly or monthly payment of wages and other invoices, regularly billing and collection of service charges, including management fees, provision of a periodic budget report of income and expenditure and cash flow, annual preparation of draft accounts in anticipation of audit and subsequent liaison with the auditors, preparation and distribution of the notices of the AGMs, arrears collection management, advice on insurance and any other appropriate cover. Relationship with owners, attendance and at annual general meeting, track common property insurance claims, act as a conduit, forwarding queries from owners to the trustees, directors and back. I think this is quite clear actually. Repair and maintenance management, prepare and repair and maintain a maintenance plan, deal with day-to-day repairs and maintenance promptly and efficiently, preparation of maintenance plans and contracts for plant and machinery. This is of particular importance for buildings with lifts, assess control facilities and air conditioning systems, advise on major contract work and the use of specialist professionals and controls. Staff management, prepare job descriptions for employers and specification for contractors and go to competitive tender, supervise any employees and regular contractors such as gardeners, security, etc. on behalf of the employer. Body Corporate and Homeowners Association report, advise on management policy, attend meetings and be responsible for administration of minutes, provide a status report of financial maintenance and legal matters, document management procedures and issues, produce a periodic newsletter to residents. This is done on request only. Update members, directors on the status of agreed on actions. Contractual duties to agree in writing the terms of engagement to manage a client's property in as detailed as reasonable possible. To manage the client's property in compliance with all the current appliance legislation, terms of leases, contract documentation, and good business practice. To provide as cost-effective service as is reasonably possible. To, on request, provide guidance to the client as to the insurance requirements. Conclusion, quite often the property... Yes.
Sorry to cut you off there. Concerning the Homeowners Association, is this a body that is active in South Africa? Because if I'm not mistaken, it's something that is mostly used in America. Am I wrong? No. Is it something that also exists in South Africa? And who is the Homeowners Association? Okay. Is it people who own properties? Do they fall under that category, that group? And what do they do, the Homeowners Association?
Okay, let's go back to a body corporate. A body corporate is, in most cases, a sectional title complex.
Correct.
So that is either a block of flats or simplexes, or it's a sectional title. Homeowners is more full title, if I can say it that way. So your big security estates as homeowners association, because all the homeowners belong to that association. Whereas a body corporate, they can say, okay, only 50 or 60% of the owners must belong to the body corporate. But you get the homeowners in South Africa and you get the body corporate.
Okay. So am I correct? Do I understand well by saying that because you said homeowners are people with full titles, so anyone owning a home, a house?
Yes, a house in a security estate, not in a like we are in town, not like that. It's in the security estates. It's all security estates.
Okay.
Yeah, I'll give through on the group the differences between body corporates and homeowners.
Super, thank you.
Okay, conclusion. Quite often the property management function is not given its full due and there is little or no distinction drawn between a professional property manager and a property manager that knows how to be rent collector and just to go through the motions. At the end of the day, the property manager needs to make the property work. That is in short, if you are a property manager. This is the last slide. Any questions before we go back to Cabela's 10%? Any questions? I'll do that difference between the body corporate and homeowners now. Okay, let's go back there. Cabela. Importance of property management is important. They believe that the investment of their funds in a particular property will yield a specific return. Cabela, I can just, before we go to that figure, is that it depends on your property. That 10% is not a fixed rate. It depends what type of property you purchase. Is your intention to have a return on your investment of, if I look at a mall like Colonnade, for instance, there the landlord will decide, okay, they will be happy with a return on investment of 7% because it is a big building and the growth value is not that high per year. But if they do spend more money in there, obviously they will request a higher rental income, and you will always see that they will spend money just before there's an increment on the lease, a yearly lease rental. and that is to make up for their yield. If you look at a building where, say, a block of flats, for in case in Sunnyside, that's not student accommodation, you will say, okay, I'll be happy with, say, a 13% yield. But when you put students in, obviously that yield is now climbing to like 19 or 20%. So it depends on what building you have. So the 10% in this instance is not a fixed rate. So meaning your cap rate of 10%, that is what your intention is. Your income is 10 million and your cap rate is this, then produces a value. The value of your property will then be 100 million. If you can improve the net income of the property by 10%, meaning that you have your 10 million, now you improve it by 10%, so you've got an 11 million, then the same cap rate of 10% will give you 110 million.
So with that, it's the responsibility of the property manager to bring in that net income. Is that what you're saying?
Yes.
All right.
Yes.
So meaning the property owner will sign a contract with the property manager to say, okay, I want you on board, but for this financial year, I want you to bring me an income of 10 million or an income of whatever.
Yeah, correct.
All right.
That is part of the mandate and of the agreement. Any other questions?
Rina?
Yes.
10% is really high. I will not pay you.
True. I agree with you. That your rental income, 10% is high. I must say that in our contracts, I say inflation rate. I always work on the inflation rate because that for me feels more reasonable.
I agree with you. I will settle for inflation rate. It's reasonable because the property manager should be there to also assist you to grow. And I find that most of the time they are the ones who benefit more than the property owner because of those high percentage rates. So what your company is doing actually empowers the owner of the property for them to grow and even give you more business.
My vision is, maybe it's wrong, but this is just my personal vision, is that if I take on any property, either a building or a house or a flat, I'm telling the owner, you give me 100% quality property, meaning you will pay the paint out of a house or the flat. You will have that flat in 100% condition. Then you can look at the rental income for that area and you can try to max on the rental income. And by that way, you can add the value. If he gives you a scrappy place, obviously you will have a smaller rental income. And that also counts for a block of flats. If that block of flats is not up to standard and there's every month you have to work on the plumbing and on the electricity, obviously the tenants are going to move out and you have to drop your rental to keep the building full. But if the quality of the building is there, I can assure you, if you've got a happy tenant, you've got a good income.
I certainly agree with that. I've also experienced, because I've been trying to learn property management, a company that refused business because after the inspection of the building, they felt it's going to just damage their reputation. The building is not well kept. There's just too much repairs and maintenance required. And the owners were not willing to invest more. And the company said, no, we cannot be your property managers. And yeah, so I found that really very interesting. I think I'm taking that from what you just said now.
Yes, and that is so true, because remember, you are really going to build a bad name in the field only by one building or one property, where the owner, you don't know that owner, they can blackmouth you. And the social media is so generous on blackmouthing, you can't believe it. So it's dangerous to take on buildings that the quality is not good. And it's going to cost you actually more. You charge like 10% fee maybe, or 12.5% fee, whatever the fee is, or you even come down to get the business. And at the end of the day, you spend more hours at that building and you can concentrate on your other buildings. So yeah, I agree. One must be you must pick out what you want to do and not to do. Any other comments, suggestions? Okay, then I take is if everybody is happy, what I will do is I'll quickly put on the differences between a body corporate and homeowners association on the group. And yeah, then we will have tomorrow evening, Moses will do the investor side. That's also going to be quite interesting for you on the investment. And then this Thursday, we will not have a practical session due to all the, I want to say it in Afrikaans, deurmekaar week. But next week, we will definitely have it. And on Monday, we will definitely have it. Also, please look at the group. I'm going to tell you what you must get for Monday night. How are we going to start our file, our portfolio, everything that you must do, what we're going to do Monday. Is that acceptable?
Yes. Thank you, Rina. Yes.
Okay. All right. And then we call it tonight. Thank you for your time and everything, and have a blessed evening.
Thank you,
Bless you
Rina.
too.
Thank you.
Rina.
Bye-bye. Bye-bye, everyone.
Bye.